Hello, everyone. Happy Friday. I hope everyone is having a wonderful week. My name is Riley. I'm the Customer Success Manager, and I just want to welcome you to our RightCapital Academy Back to Basics Part 2. So I first want to welcome everyone. Thanks so much for being here. This is our new webinar series that we launched to provide a more in-depth overview of best practices, and we want to provide you with insights into our different planning modules. My goal is to make this a collaborative presentation that includes case studies and guest speakers to provide more information on specific topics. But first, we want to give you a second round of that back to basics content. So in early April, I hosted part 1 of our Back to Basics series. A recording of that presentation is uploaded in our Help Center, so please feel free to check that out if you're interested. That webinar highlighted optimizing action items. We went into reviewing client settings. We used data visuals to elevate our client presentations. And then the last thing we covered there is leveraging RightCapital's essential resources. So I have lots of content that I'd like to run through. So there will be a Back to Basics Part 3. My goal for Part 3 is to move away from the traditional overview and weave in the Back to Basics content into some hypothetical planning scenarios that an advisor might want to model for a client using RightCapital. So if there are any planning scenarios that you'd like to see, please feel free to add them in the questions field, and then I'll do my best to create content with your suggestions. So on today's agenda, we will be reviewing 5 essential tips for effective planning, where I will review another round of key planning items to be aware of in your client plans. Then I'll review optimizing your workflows using our templates. So we have tasks, reports, planning access, and snapshot templates that can help create more efficiency among your client plans. Then I'll be moving on to some key features in the advisor portal. And then to round out the presentation, we will be reviewing some advisor analytics that can also help boost that client experience. So at the very end of this webinar, there will be a live Q&A. So if you have any questions pop up, please feel free to ask them in your questions field on your webinar panel. And then I would like this to be more of a collaborative conversation at the end. So if there's any topics that you'd like me to review, or if you're looking to talk through a specific scenario that you may be working on, please let me know, and then I can review that at the end. So I'm going to transition over to my advisor portal, and then we'll get started in a specific client plan. So hold on one second, just switching over. All right, here we go. So I'm logged into my advisor portal here. So you'll see my clients tab on the far left. So before I jump into the Adam Sandler plan, I just want to give you a quick overview of this client plan. So this is for a client and co-client. They're in their mid-50s and they have 2 children. Their net worth is around 1.2 million, and that's including their primary home. And the current rate of return is 7% in the plan. So I am going to launch the Adam and Jackie Sandler plan here. And then the first thing I want to cover today is at the very top right of my screen, you'll see the Profile tab. So I'm going to click into Profile, and then I'll be on the net worth. So in your client plans, we capture a very detailed overview of expenses. So starting off in the net worth, we model out specific liabilities, starting with credit card payments. So on the left-hand side of my page, I'm just clicking into each category of our net worth. So up first is our credit card payments. And then we capture loan information. So scrolling just a little bit further down and clicking into loan. Here we can model our mortgage, car loans, and student loans. So under the loan type, I'm clicking into mortgage. And as you can see, we have lots of different loan options. So again, it's modeling mortgage, adjustable rate, interest only. We have our car loans, student loans, other loans. And then also in the client's net worth, we model out under our property, under our primary home, we capture property tax, annual maintenance on a property, as well as homeowners insurance. So a lot of expenses are already captured in our net worth. So right here, after reviewing the different expenses that we've captured, we have in my plan, we have $14,668 already accounted for in the net worth. And then the second place to add expenses is at the very top right. I'm clicking into Profile and then the Expense tab. So in our pre-retirement living expense on the far left, I'm clicking into this card. It is extremely important that we do not capture the previous liabilities that I just went over into this monthly expense figure. So this would cause a double counting in the plan and lead to different planning projections. So if I were to include that $14,000 of a yearly expense into this monthly expense, that can change the planning projections quite significantly. So this monthly expense figure should not include any mortgage, debt, or insurance premiums. So this $4,000 should be anything above that. So their bills outside of that, their activities they may do, shopping, Starbucks coffee, things like that. So if the client is completing the data entry, you can click into this pre-retirement living expense card and switch between a simple approach to a detailed worksheet. So now I can see each budget or default budget category here, and that can make it even easier to avoid double counting expenses. So here the client can click into bills and utilities, they can map out the education costs, the shopping, the kids, things like that. So again, just avoiding that double counting if the client is doing the data entry. And another thing I'd like to point out is here in our budget categories, these are all defaults, but you can make adjustments for the client plan. So if I go all the way up to the very top right of my screen, I'm going to click into the gear icon, and then I want to go into the client specific settings. So if I click gear icon and then go over to settings, on the far right of my page, you'll see budget categories. So if I click into budget categories, here I can make adjustments to those default categories that I see, and I can also add and remove them. So then you can make a very concentrated budget category outline so that when the client is doing the data entry, or if you are completing the data entry, it can make it even easier to map out those expenses. So in our budget category tab, you can click on add category, income, expenses, and other. And then if I wanted to make adjustments to the pre-built budget categories, if I hover over towards the right of the name, you'll see a little pen and paper icon. So I just click into that. If I wanted to retitle the bills and utilities, I can make that adjustment. And then I just want to press that blue check mark to save the work. So again, back in that profile expense tab, extremely important to not capture what we've already laid out in our profile net worth tab. So super helpful. Again, that's the gear icon settings in budget categories. And it is popular if the client is doing that data entry back in that profile expense tab, just to switch over their pre-retirement living expense card over to that detailed worksheet. Perfect. So then I'm going to go over to our profile goals card. So at the very top right, clicking into profile, then I'm clicking into goals. And then when the first client in the projection retires, we switch over from that pre-retirement living expense card over to this retirement expense. So if I click into that card, it looks very similar from that pre-retirement. And again, it's extremely important to exclude those insurance, the debt we have entered, those credit card payments from this figure as well. And you can do the same thing for the goals card. Under that expense approach, you can switch over from a simple over to that detailed worksheet. And then I just wanted to provide a visual on how this can impact the client plan. So I didn't want to take time to add in that $14,000 figure into the goals card here. So I modeled that out before the presentation. And I just wanted to show you a quick screenshot of that comparison, just to show you what that could do to the plan if we are double counting. So in the first screenshot here, and I'm sorry if it's a little bit too small, but in our first screenshot, this is modeling out expenses correctly. So I'm excluding that $14,000 that I've already captured, and I can see that the client has a 69% probability of success, and their median ending asset value is that 2.9, a figure in that green bar. But then I went in and I double counted those expenses. So I added that $14,000 to the I divided that by 12 and then added it to that monthly expense figure. And then that second screenshot shows that if I were to do that, the client actually has a 44% probability of success, and they actually run out of money in their projection. So it's always very beneficial to review with the client that they are not double counting those expenses. And we all know that could be easily done. A lot of people don't separate and think of expenses in that way, but it's extremely important just to know what we've already accounted for and what we're not accounting for in those pre-retirement and then post-retirement expenses. So just want to show you that visual. It can make a significant impact to your planning projections. All right. So now I'm going to stay in the goals section, and I wanted to point out our retirement age card. So on the very far left of my page, I can click into retirement age. And then here I'll see Adam and Jackie, and this card will default as a full year for retirement. So I assume that they both retire at age 67. But in this card, I can actually specify a specific calendar month for retirement. So I can check off this box. And then right below that, I'll see the client and co-client, and then I can choose a specific month for retirement. So this is very beneficial because specifying a specific month for retirement allows our income and expense cards to be prorated in that last working year. So if I chose or if I selected Adam to retire in May of 2037 when he's 67, if I have an income card or an expense card tied to end at the retirement, we will prorate it from January of that year to the retirement month of May. So this can be very helpful in getting a detailed cash flow and not assuming that the client is getting that full salary in the last working year or modeling out that full expense in the last working year. So again, it's just checking off that box, specify a specific calendar month for retirement, and then just selecting the month that they'd like to retire. And again, all income and expense cards. So if I were to click into the profile income section in the data entry, and if I were to click into Adam's teaching salary card, in this card, the income is ending at his retirement, so we will prorate that last working year. Awesome. So I'm going to go back into that goals section again, so profile goals. And the next thing I want to highlight is our annual retirement health cost card. So if I click into this retirement card in the middle of the page, this card is used to reflect Medicare premiums in retirement. So in this card, by default, under the, and I'm just going to switch this over just so you can see it as a visual here as the same for the client and co-client. So we assume that the cost starts at the client and co-client's retirement, and the cost estimate is national average. So that's just using our most updated figure of $6,145 a year. I can control when the cost starts, so I can click on Adam's retirement to specify a specific calendar year, age, if it's already started, or even that retirement. But under cost estimate, I can click on this dropdown and I can customize the amount, I can switch over to a detailed estimate, or I can keep that national average. Our most popular option when modeling out Medicare premiums is switching over to a detailed estimate, because this will allow you to map out pre-Medicare costs. So before the client turns 65, I can model out that expense. And then RightCapital will automatically calculate Medicare Part B and D premiums based on the client's AGI. So you get a very detailed calculation year over year in the cash flows that can fluctuate based on their AGI. And then the last very important component here is under out-of-pocket expenses. This is used to model supplemental insurance, such as Medigap, or you can model out dental or vision coverage. So it's giving you more flexibility to really isolate and get that kind of detailed estimate into that cash flow. So again, that's just clicking on the cost estimate and switching over to a detailed, and then I can do the same thing for Jackie. And another very important thing in our retirement healthcare cost card is if I have a detailed estimate turned on for the client, this information will feed over into our Roth conversion module if I'm looking at premium thresholds. So for a visual here, I'm going to leave Adam as a detailed estimate, and I'm going to leave Jackie as a national average. So if I press save, and then I'm going to navigate over to our tax distributions module. So up at the very top of my screen, clicking into tax, and then I'm going to go into distributions. So this is our Roth conversion module, and I'm going to go over to the details tab on the far right. And on our details tab, we have information on that Medicare premium threshold. So here on the screen, you'll see the columns at the very top, and one says Medicare premium threshold, and then we'll see Medicare premium for Adam and Medicare premiums for Jackie. So if I scroll down to their retirement, we'll see those premium thresholds, and then we will see the Medicare premium for Adam, but we do not see it for Jackie. So in order to feed information over to our Roth conversion module in regards to Medicare, you will just need to use that detailed estimate. So that's where we can see that detailed calculation as well. So again, just switching over to that detailed estimate, and then in our Roth conversion module, when you're looking at that Medicare premium information, it's looking at Medicare premiums for Adam and Jackie, but we need that turned on in order to get that information. So if I went back to that profile goals section, clicked into that retirement healthcare cost card, and switched Jackie over to a detailed estimate, we would then see her premiums in retirement. Again, lots of Help Center content on this. We have lots of helpful webinars that go over this component in a lot more detail, but I always like to point out that a detailed estimate does a lot more in RightCapital, especially in our details tab in our conversion module. And then I just want to show a breakdown in our cash flows as well when you're using a detailed estimate. So if I go all the way up to the very top of my screen, I'm clicking into our retirement module. And then on the far right, I'm going to click into cash flows. And I like to point out you can use any option that you'd like. The detailed estimate, I just like to show as a visual. So if I'm clicking into the summary tab here, and then at the very top of the cash flows, anything that is underlined means I can click into it for more detail. So for example, if I wanted to see in 2023 what's making up that $92,486 figure under expenses, I can click on expenses. And then here on the next column, I can click into healthcare, and then I can click into Adam's retirement costs. And then here you can see a detailed overview of Medicare Part B, D, and then that other category mapping out dental, vision, or any additional supplemental insurance. If I were to switch back over to the national average, you would see one column, and then we're just capturing that as a full expense of that $6,000 figure. Awesome. So I am going to go back over to the profile tab. And the next thing I want to cover is in our profile net worth under our investments. So we have 3 ways to assign an asset allocation in RightCapital. And I always like to review them just because you can do so much when assigning the asset allocation. It's just important to know the 3 options that you have. So the first option, and I'm going to use at the very bottom of the investment tab, I'm going to use Jackie's Roth IRA as an example. So when I added her investments here, under the entry itself, under entry method, I have it set to enter total balance. And then right below the total balance, we have our asset allocation set to customized. So that allows me to click into customize. And then here I'll see each asset class percentage, and I can make adjustments. So by default, it will be set to 100% other at the very bottom right. I just want to click into it, zero that out, and then I can make any adjustments. So let's say that this account is 50% large growth, 10% international equities, going to add some government there, and then some high yield. So that all adds up to 100%, so I'm good to go. And then all I have to do is press that save button. So that allows me to customize that asset allocation for Jackie's Roth. The second way to assign an asset allocation in RightCapital is using our model portfolios. So I'm going to use Adam's 401k here. And right below, so I'm still using entry method set to the total balance. I'm adding the total balance. And then when under asset allocation, by default, it will say customized. And then I can make adjustments. So I am actually going to start over from scratch just to show a straight visual from A to B. So if I click on add account at the very top right, and then I'm going to add the investment, and then let's just say this is Adam's 401k. I'm going to adjust the account type. Entry method is enter total balance, enter the total balance of his 401k, and then again by default it will say customized. I just want to click into that. And then at the very top left, I can click on asset allocation customized. It will give me a drop down to switch over to based on model portfolio. And then right next to that, if I click on that drop down, we will have 7 pre-built model portfolios that you will all see in your client plans. And then you can always add your own in the advisor portal. So now I can easily say that this 401k closely models an aggressive model portfolio. And then each asset class will automatically load with the percentage that I have assigned to that model portfolio, and then I can press that blue Save button. So this is very beneficial if you need to assign an asset allocation rather quickly, or if they do not yet have a 401k and you're proposing adding that, you can then say it follows this model portfolio closely. So again, just a very quick way to get that in there and assign an asset allocation. And then right below the total balance where you see asset allocation, it will then say that this is allocated based on a model portfolio. So that is number 2. And then the last option is adding by specific ticker or by specific asset class. So I'm going to do the same thing. I'm going to click on that blue Add Account dropdown and then clicking into Investment. And then let's just say this is a joint taxable account. I'm just going to switch over that owner to joint. And then a key thing here is under Entry Method, I'm going to click on the Enter Total Balance and then switch over to Enter Holdings Asset Class. So as soon as I select that, right below that, you'll now see at the very bottom right an Add Holding button and an Add Asset Class. So all I have to do is click Add Holding, and then I'll see security pop up on the far left. I just click into that field and enter the specific ticker symbol. So we import this information directly from Morningstar, so you'll automatically see a list pop up with potential ticker symbols. So I just click the one that I want to add, and then I just want to map out the quantity and cost basis. And then press Save, and then I can do the same thing by clicking Add Holding again. It will then add another security line item, and then I can make that adjustment, or add that in, I should say. Quantity and cost basis. So 3 ways to get there: customize your asset allocation for the client, base it on a model portfolio that you either use our pre-built model portfolios, or you can create your own in the advisor portal, or you can switch over that entry method, again, clicking on that drop down and switching over to Enter Holdings Asset Class. So lots of ways to get that entered in there. I always just like to say that when you add an investment account, it is defaulting at 100% other. So you just want to make sure that that's all aligned as you're creating and presenting those plans. So those are the 3 options. And then to kind of segue on top of that, it is extremely important to make sure that cost basis is entered in RightCapital. So right below, I'm just using the GM ticker. If I didn't have cost basis entered in, I just want to quickly review what we're kind of doing on the back, kind of the background. So we are adding up the total taxable bucket, and then we're subtracting out the cost basis, and then we're applying our portfolio turnover for that realized gain. So it's extremely important. If you have a client account here and there's no cost basis, we're assuming a lot more gain than that's probably not actually happening. So again, cost basis is extremely important to enter. And to get more information on that portfolio turnover and what we're doing, you can go all the way up to the very top right of the screen and click into the gear icon, and then click into the settings. And then in the settings section, under the under the tax assumptions, towards the kind of left side of the page, you'll see our portfolio turnover. So by default, it's 5%. So what we're doing is adding up all the taxable accounts, subtracting out the cost basis, and then we're multiplying that by our 5% portfolio turnover. And the last kind of tip I want to hand out on the cost basis, so I'm going to go back into the profile net worth. I'm clicking into that investment, and then I'm just going to go back into that taxable account. If you have an account with multiple holdings entered, you can enter the cost basis on the very first line item. So if there was 25 holdings here and they all had $0 entered for their cost basis, I can enter that full amount on the first line item. So RightCapital doesn't look at the individual ticker symbols for cost basis. We look at the aggregate value. So let's just say there was $50,000 worth of cost basis with 25 ticker symbols. That's perfectly fine just to put it as that first line item if you did not want to go through each and every one to enter the cost basis. So again, we look at the total cost basis entered. We're not looking at individual line items. It's just the aggregate value of the cost basis for that account. So again, if there's any questions on modeling that asset allocation, please let me know, but we have 3 ways to get that in there. All right, so I'm gonna move over to the profile and then our savings section. So profile savings is where I can model out active contributions into the different savings accounts here. And I wanna add one specific one today to cover, and that's clicking into the Add Savings dropdown. And then if I scroll down to the very bottom and hover over Other, I'm going to add a tax-deferred savings card. So I always like to point this out because our tax-deferred savings card is our only savings that is modeling outside contributions coming into the client's tax-deferred bucket. So again, this is outside contributions. It's not coming from the client's inflows. So this card is most commonly used to model a lump sum pension, so modeling something coming into the client's tax-deferred bucket. And this card is used to show any employer contribution to the retirement account where an employee does not contribute to it. So for example, it's a lump sum pension, or maybe a teacher receives funds for unused sick days. When she retires, maybe the school rolls that over into the client's tax-deferred bucket. I can model that out here. So again, tax deferred is the only savings option that's coming from an outside source into the client's cash flows into their tax deferred bucket. And then I just want to show what a lump sum pension would look like if I was entering that here. So I can title this tax deferred card whatever I'd like. So let's say this is a lump sum. Oh, I'm sorry. Cannot type today. Lump sum pension contribution. Let's say that's $500,000 coming into the plan. Adam is the owner. Target is that annual dollar amount, and then that savings starts and ends would need to be set for the same year. So I can say, click on that drop down, switch over to calendar year, and then say this is coming into the plan in 2030, and then my savings ends would be in the same time frame. So calendar year 2030. That's reflecting 1 year coming into the cash flows. And the last very important component is where would you like this to be saved to? So under the Save To dropdown, I can specify, is this going into the 401k bucket, or is this going into the client's traditional IRA bucket? So again, very important just to note that a tax-deferred card is an outside contribution, most commonly used for lump sum pensions or to model out any other specific scenario where it's not coming from the client and it is strictly an employer contribution. Awesome. And again, we have lots of content in our Help Center. If you search lump sum pension as well as just tax deferred savings, and then we model out some examples there as well. Perfect. So I'm going to go over to our profile income section and highlight one important card here as well. So in our profile income, that's where we can map out lots of different income sources. So I can click on this blue add income dropdown. And I want to add our income distribution card today. So if I right below annuity, I can click into distribution. And then here I can model out specific distributions from different account buckets. So in RightCapital, our standard withdrawal sequence is to pull from the client's taxable bucket. Then we tap into their tax deferred, and lastly, their tax-free bucket. So an income distribution card allows you to override that standard withdrawal sequence and tell RightCapital the time frame on where they're pulling from, maybe a different account bucket. So right now, just as a default, this is coming from the client's 401k bucket from 2033 to 2038, just as an example. So I can title this whatever I'd like, but maybe the client is pulling from their 401k to go towards something, or maybe they're making a home purchase, or they're just pulling from their 401k and you don't want them to pull from their taxable bucket first. Let's just, as an example, say $10,000 a year. So I can type in that annual amount, Adam is the owner, and then that from account dropdown is very important. So what account bucket would you like RightCapital to pull from? And then calendar year, let's say from 2025 to 2030, he's pulling $10,000 a year. I can also assign an annual increase to that. And then right below that under type, we have our different options. So normal distribution will distribute the assets from the specified type of account and apply a standard taxation. So that is just our standard distribution. It's getting taxed just as a standard level. And then our convert to Roth IRA is allowing you to illustrate Roth conversions from that IRA, 401k, Roth 401k, and then roll over to IRA is illustrating rolling that money from the 401k, qualified pension, or qualified annuities. And then our last option is that a net unrealized appreciation, and that's selling that appreciated company stock in the client's 401k or other defined contribution plans. So lots of options here. Again, it's to override that standard withdrawal and tell RightCapital from what account bucket the client is pulling from. And I always like to say this again, Help Center, we have a really good training video on this and how to optimize it. And I am clicking into that type one more time. And for the convert to Roth IRA, that would be used if you are not using our Roth conversion module and you want to map out specific years for that conversion. So that is our income distribution card. So I'll save that there. And then I want to shift gears and highlight our 4 templates in RightCapital. So templates can save you a lot of time and allow you to customize a lot of aspects of your financial plans. So I'm going to go back over to our advisor portal. So I'm just going to click that RightCapital logo at the very top left, and this will bring me back out to my client list. So the first template in RightCapital is in our task tab. So up at the very top of the screen next to RightIntel, I'm just clicking into tasks. And then I'm going to click into templates. So here on our templates tab, I added a few examples to run through just as potentials if you'd like to use that as a task. But this saves you a lot of time when you're working in the client plan and you'd like them to do something either within their plan or as a reminder. So you can remind them to upload a statement to their client vault. You can even concentrate that to what document you'd like them to upload. So uploading a specific Social Security statement. Another use case is giving them a reminder to complete that data entry. So if you did invite them to their plan, it's very common to give a client a task to say, hey, log in, complete the data entry, and then we can move on from there. Another really popular one I see is a contribution reminder. So just giving clients a to-do, kind of just reminder that you have a contribution coming up. Another popular one is a rollover reminder. So don't forget to roll over X amount, this account to this account by May 31st. Also scheduling a meeting with the client. Hey, let's touch base. Let's go through anything. Let's schedule a meeting. You can also give them a task to link specific accounts to their net worth. And then also completing a monthly budget. That's very popular with the younger clients who are really involved with their client plan and really want to take advantage of our budget module. And then also filling out that data collection template. So if you are not inviting the client to have access to their plan, but you do send them our data collection template, this can be a great reminder just so they complete that and then they can upload that right into the client vault. So just some popular options that I wanted to give you here. And then back on the task tab at the very top, under all tasks is where you can assign that task template. So on the far right of the screen, I can click add tasks, and then you'll see in that drop down task template. And just a reminder, the client will receive a notification 2 weeks, 1 week, and then the day the task is due. And if that's too much of a kind of a notification for them, they can control that when they log in. But 2 weeks, 1 week, and then the day that it's due. Awesome. So then I'm going to head over to the other task section in our advisor portal, and that's up at the very top right, clicking into that gear icon, and then our templates tab. So we have our report template here, our planning access, as well as our snapshot. So under reports, creating a report template can save you a lot of time when you're in the client plan looking to run a report. So I always recommend running a client report with everything in it and then going through that and kind of selecting what kind of reports can you segment out. So if I click into my report template dropdown, I have some different ones here. So a popular one is isolating specific modules. So for example, if I only wanted to run one on the client's life insurance analysis, I can build that out. I can also click on that drop down. Another key one I see is visuals. So if I wanted to run a report strictly on the visuals in RightCapital, so highlighting the snapshot, the cash flow SAN key diagrams, as well as the blueprint, I can segment that out. I can also build out one standard report that I run for all of my clients, and then I can build on top of that standard. So, or I can even call it basic, so basic or standard, and then I can do the basic report plus a specific module or plus a specific Roth conversion. So just very helpful to segment out specific parts of the report, and then when you're in any client plan moving forward, you'll see the select template dropdown, and then you can easily apply that to the report. And then the last one here is the net worth. So if I only wanted a report that captures the net worth, I can do that as well. So you can make them more complex or very basic, just depending on what you're looking for. Awesome. And then the next one is our planning access. So clicking into it, this is where you can control the level of information that you want to share when the client logs in. So for example, if I wanted Adam and Jackie to only see key visuals and then I wanted to introduce access later in the future, I can create that planning access here and then assign it to that specific client. So for example, under that select template, clicking on that drop down, and then at the very bottom, if I only wanted to introduce key visuals, I can check that off. And then on the right-hand side, I can click Apply Template. And then here I can say apply key visual to a specific group, all clients, or even just a specific client. So if I wanted to type in Adam, and then all I have to do is press save, and now his planning access is only looking at those key visuals. And let's say 3 months from now, I had a conversation with Adam and I want him to see more modules when he logs in. I can always go back to my clients tab here on the far left up at the very top, and then I can search Adam's name. And when I click into his name on the far right, you'll see his planning access tab, and then I can make adjustments for that client specifically. But in the planning access tab, when you assign a template to the client, next to select template, you'll see that key visuals is automatically there. And then if I wanted to give him more access, all I'd have to do is check off what module I'd like him to see, and then at the very bottom, just press save. So this is a great tool if you want to slowly introduce some of the planning modules to RightCapital, or if you strictly just wanted some data visuals, or if you only wanted the client to have access to the vault. It's just an easy way to save time and make sure that all planning access is aligned with what you'd like. So if I go back up to that gear icon again, just clicking into that, and then I'm going back into that templates. So lots of range, kind of everything you can do here, but again, just clicking on that drop down and going through it. I'm sorry, I'm not on the report, planning access, sorry. So then if I click into select template again, I can also do specific client tiers. I can do specific client ages, so Gen X, millennial, pre-retirement, things like that. And then just that basic overview plus any key elements as well. So if I wanted a basic planning access tab for all clients, and then depending on their situation, I could do basic plus education or basic plus life insurance, and then always come here and just apply that template very easily. Awesome. And then our last template here is our snapshot. So our snapshot module is a nice one-page overview that you can customize for your clients. And you can always come here to develop a kind of a display that works for specific client groups or just specific clients. So here I can apply the templates similar to our planning access tab. And if I click on that select template drop down, I just want to show you a few examples. So I have a pre-retiree, I have a millennial, so the millennial is great to highlight modules that involve the client in their plan. So this could be budget information, current year savings, liquidity, investment concentrations. In our pre-retiree, you can include the stress test, the probability of success, also that liquidity module is popular. And then if I click into our retiree, I can look at that retirement income stability. I can look at Social Security. I can include the withdrawal rate, and we can also look at some income sources as well. So you can really customize this to a tier of your clients and really make it really highlight key information in that specific plan. And then I can also do a very basic, I can also do a standard again, and just apply that to everyone. And then moving forward in the future, you can customize that. So that's our report templates. Again, just saves you a lot of time. There's lots of ideas that you can develop for the client plans, but it's very easy to apply the templates and then always make adjustments in the future. And then up next, I'm going to jump into the RightIntel tab. I won't review this in too much detail. There's just two parts that I really want to highlight here. And the first one is in the RightIntel Client Overview tab. And then on the right-hand side, I'm clicking into the activities. So this can be a great way to track client engagement. And then if the client is not logging in or not making specific adjustments, you can always create a task to get them to do that. So I always recommend checking out this activities tab. This will highlight the past 2 weeks of activity, but you do get a daily email with client activity, so you can always reference that as well. But this is a great way to look at what the client is doing, are they active, and then you can use our task feature to get them reactive in the client portal by using the different tasks. So super helpful information here. And then the last thing I want to highlight is in the RightIntel Opportunities tab up at the very top. And then I'm going to click into the Key Event tab on the far right. And this is the most popular tab in our opportunities. And this is just looking at different key events. So this can also help with client engagement. So I can look at the all key events and see, is the client coming up on one of these key events? So for example, if I look at the age 50 catch-up contribution, I can see that Jackie is coming up on that contribution this year. So again, I can create that task and just to clarify and kind of give that as a notification that you can now make those catch-up contributions, and then you can talk through that with the client in the future. All right, and then to round out the presentation, I have a few extra items in our advisor portal that I want to highlight. And the first one is our model portfolios. So up at the very top right of, or top middle of my screen, I'm sorry, clicking into that models tab, and then I'm on my portfolios here. So number 1 through 7 are pre-built by our product team. So you will see that in the plan, and you can always build out your own model portfolios. So all I have to do is click on this blue Add Portfolio button. And now I can either model out the portfolio based on the asset class. So I can just scroll down and assign a percentage and build out that model portfolio, but I can also use holdings based. So if I wanted to use a specific ticker or target date fund, I can easily build that into a model portfolio. So if I click on this asset class dropdown, so right next to model type, I can click and switch over to holdings based. And all I have to do is press confirm. And then on the right-hand side, just click edit holdings. And then at the very bottom left, I can select add holdings. And then for example, if I wanted to do a target date fund, and I'm just using a random Vanguard one as an example. So all I have to do is enter that target date. It will automatically pop up because we're feeding that over from Morningstar. And then I can just say that it's 100% allocated in that target date fund. I just press that blue save button and then press save at the very bottom. And then this will update. And now I can see that all of the different asset class information is automatically updated based on that target date fund. And then I can title this whatever I'd like. So if I, right next to new portfolio, I can click on this pen and paper icon, and then I can either title it with that target date fund, just as an example, so that when I'm in any client plan moving forward, I just know that that is that target date fund. And then press that blue check mark to save it, and I'm good to go. So again, it's using a specific asset class or switching over to that holdings based, and it's just clicking on this drop down to make that switch. All right, and then up next, I'm going to click into the gear icon at the very top right of the screen, and then I'm going to click into the account tab on the far left. And then the thing I want to highlight here is in our customization tab. and that's right below the logo. So that is our branded login page. And I always like to point this out. You can either put this on your website as a button if you're directing your clients to log in to RightCapital through your website, or you can send this in a separate email and just have your clients bookmark this link. So our branded login page is a default landing page where the clients can see your logo and then they can log into their RightCapital account. So I'm just going to copy this branded login page, and I just want to show you what that will look like. So again, a lot of advisors will use this on their website, either by a button or a link directing them to RightCapital. And then some advisors will also email their clients this and just, say, hey, bookmark this. This is your default login page moving forward. So you'll see where the RightCapital logo is. That will be your logo. And then it's just a nice defaulting login screen for the client. So again, just another way to boost that client experience. All right, and the very last thing I want to cover today, again in the advisor portal, is up at the very top, and I'm clicking into assumptions. And then I'm on the far right of my page, I'm clicking into our miscellaneous assumptions. And I just want to give an overview on our return model assumptions. This is a recent update that we made on our model type. And you'll see it says standard, and I can click on that drop down to switch over from legacy or standard. And I just want to point out that our legacy is our what we were using before this update, and it uses a stochastic volatility to capture complex dynamics of equity and bond modeling. And then our standard is a log normal distribution model, and it provides more flexibility when setting asset class returns and volatility assumptions. I'm not a math major, but you can always click into our help center down below, and it just gives a detailed overview of the difference between the two. But if you are on a standard, or if you switch over to standard, I just want to point out that in our asset return tab, in our assumptions, so two tabs over, I'm clicking into asset returns. Right above total return and volatility, using that standard model allows you to click on that drop down to switch between your customized returns, historical index returns, as well as the JP Morgan forward-looking assumptions. So again,